The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hello everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday at this particular time. And we're just going to wait. There's nothing to do. The market's spiked up, but it's bound to have a bit of a pullback before the Fed, just immediately before the Fed says anything. Let's just run through the different scenarios. I'll first run through the numbers. Dow's up, let's go through this way. Dow's up 57 at 18,187. The S&P is up 8 at 2147. The comp index is up 19, and that is comp index is up 19 at 5260. You've got the volatility index now under the 15s. This is positive action technically at this particular time for the VIX index, because it's under 15s rather than over 15s. However, we'll see what happens after the Fed statement, and we'll go through that in a moment. The E-mini is up 875, and you can see what's happened. It's made a peak B in the daily, but the technicals, everything about it is suggesting that this rally in the stochastic, which basically hasn't seen the price of the E-mini itself rally to a new recovery high in leg C, which would be above 2146.75. The high today is 2144.25 so far. And you've got a peak D already just being maintained in the weekly chart. Monthly chart is still looking absolutely terrific in terms of price. The MACD and stochastic have started to flatten out a little bit, but stochastic's still at 94%. That is really good. So let me go through these slowly. Within the context of what we're looking at here, I had to focus on, for my subscribers, the NQ. The NQ is the, call it the E-mini NASDAQ 100 continuous contract that I'm focusing on right now. That spike 3 days ago on the 19th to 4841.75 took out the previous high. And that previous high, let me squeeze this a little bit so that you can see what we're looking at, had made a peak D on the 23rd of August. The Dow itself made a top on the 15th of August. It's been in a 1 month consolidation. No big deal. It's not even, it's 400 or 500 points below. So it's used up time rather than price. Yeah, we used up time, and we had overnight, we had a big spike to the downside. So you've gone from NDX 4832 down to 4840. Where did it disappear? Oh, 4625. 4625. That's a pretty big pullback. And now you're seeing the price hold the 9-period moving average. This, I have no choice, because there was a recycled peak ABCD in a Chapman Wave instant restart back on when the high was made on the 1st of August. This low that went down to the 4625 area, that started a brand new buy mode because it went to a new all-time high. So this could be a failure pattern. And that failure pattern says it'll be very unusual to go to, in this case, it's almost like an all-time high, and then failure to B. It can happen because the root is the NDX 100, and the root, therefore, is the QQQ series, and that has not gone above 118.12, the high of the 7th of September. So all of this is just merely, so far, we call it topping action. But I'll make it real clear. If by this afternoon at 4 o'clock Eastern time, this time tomorrow, the QQQ series is trading in the 118.50 area, 118.30 to 118.50, we're going to be going up a little longer. And you'll have a mixed market with the Dow and the S&P being dragged up. New York Stock Exchange, I was putting it to the same category, NYA.X. Oh, I forgot to show something. Made a peak G, unusual right arm extension or rogue wave, a failure, and it's not acting all that well. and the monthly chart has gone to a peak C. There's no other way to count it at this particular point. So this is going to be very, very interesting because we have a real mixed market. To further the mixed attitude, look at the IWM. IWM is very much like the New York Stock Exchange. It had a kind of a nice bounce, but when you actually look at the chart, you say, oh, wait a minute, that's not bad, but it's not good. If you look at the IBB, which I focused on for a while, we have no position, but this is going to be where we might have to have a position. There could be a failure pattern, and I'll make it real clear. It's at 293. The high today has been 298.46. What does 298.46 means? It missed by about a point, well, a point and a tad, going to a new recovery high, which would have been very important because it misses like this right at a potential double top. 230 today is going to be really important for all of these indices. Look at the SMHs. Now, I just must mention that for those of you who follow my newsletter, if you were fortunate enough to get, I don't say fortunate enough, if you were able to get the shares to be able to short, that's fine. If you weren't, you weren't. But we're looking at this, it's real easy. I mean, you go over 67, 68, the high that was made 3 days ago, it could recycle higher, just as the NQs could. So I'm looking at this and I'm suggesting to you that based on the technicals, the weekly SMH market vector semiconductor ETF is actually looking reasonably good. The monthly chart is looking terrific. The daily chart is the one that says to me we could have a little bit of a double top and have another consolidation to the downside unless we break out by how many cents? By about 72, 73 cents or something like that. I mean, that's how simple it is, all right? Now, you remember just a moment ago I was showing you, I hope I showed you the chart. I did show in the den, that double top at a peak in the 10-minute chart. And I'd said that I believe that we should be pulling back because there'll be nervousness going into the Fed speak. And if you look at the S&P cash index, I had already drawn in that arch formation, which is a little unusual, but this has all the potential for a single leg A up spike in the cash index. It is a B, but it only took one bar to pull back and then zipped onto a new recovery high. So I'm looking at this and I'm saying, hey, it's really clear as far as I'm concerned. And I'm going to just make this, I'll include gold because, I'm including gold. GC continuous contract, it's up 10 at 13.28, but it's just really in a trading band in that rectangle that I've been pointing to for a few months now, since the beginning of July. No, since June. If you look at the dollar made its requisite peak D, a leg D. So everything about the dollar says, okay, Fed, you can do whatever you want now. If the dollar pulls back from a peak D, that says that it could come back from 95.92 down into the 95.30 area. But if whatever the Fed says, if there's a spike up, that will continue the move to the upside. Then the weekly starts to improve a lot. We've got parameters that are so clear. Dollar 96.80s, and it's moving much higher. It's at 95.93. The dollar 94.20s, it's going quite a bit lower. The TLT, run out of time. I'll get to the TLT because we need to look at this. The TLT is already in the sell mode. The bonds in the weekly chart, daily chart, and weekly chart, not the monthly yet. Oh man, I tell you, this is going to be such a fascinating day. I'll be back. Basil Chapman, Tiger Technicians Hour. There are some other things I wanted to discuss, and I'll do that when we get back.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Before I forget, what I'd like to do is Greg from Texas has been calling for a little while, and he'd been along the UNG, along the United States Natural Gas Fund, and I'd recommended that at this particular point it's achieved everything that I was looking at for the left side, right side, Chapman Wave price, time match, etc. And then he might want to take a little bit off sort of to reward himself, keep the rest as if they were split in half. One part will be a core if he can hold that, and then the other one will be a trading position. And here we are with natural gas having made UNG, having made leg E, I can call it E/B, but let's just be conservative, call it E for the moment, in the weekly chart. But it's leg C, the first time any of these commodities, I shouldn't say any of them because I haven't checked on all of them. Well, many of the commodities have not made leg C in the monthly charts at all. Many have made a fantastic leg A, then a peak A and pull back. But look at this. This is nice. And of course, I think this is the way the season works. I really should ask Andy Hecht, but I think this is seasonal. So it's got a number of things going for it, and it is acting very well. The MACD and stochastic in the weekly chart are really quite strong still. So yes, I wanted to do that. I also wanted to see now a bunch of questions came. Julie always has really good questions. I don't know if she's a specialist in the oils, but she seems to always have very good, very pertinent questions about the oil. So let me see. Let me work back here. Rig is, it used to be rigor mortis. Now it's actually least. There's a little bit of a heartbeat here. RIG trading at 904 up 20 cents. You know, this is something that I always wait very patiently for. This is the first time that I've got a kind of a low in an oil or a refiner, I guess. Let me just do this. A, B, C, D, E. A, B. I'm just putting in the Chapman Wave notation. I want to see where we are, if there's a consistency. Yes, there is. So this is going to an E again. Yeah. So what is the question? What is the wave count, etc.? Okay. So rig on the downside has done something very, very unusual. Let me show you this. I'm going to go from there to, and I have to take it to that one right there. Let me show you what I'm doing in my Chapman wave left side, right side price time match. Obviously, if I go to the plumb line, back on the high of the 13th of July from the low back in April, it's going to miss it by a lot. So sometimes what I do is I start off with a very obvious one, and I'm going to this low bar right here. Normally I take a different candle, but the low bar is really very good to do. And I'm going to go left side, right side, and I say, you know what? This looks to me like a very close. Yep, it's actually to yesterday, and yesterday was a low. And I'm going to make the suggestion and treat it. I mean, we've got numbers and stuff coming up at 2 o'clock that are going to change all over the show, have the possibility of changing all over the show. So this is what I'm going to recommend. I'm putting it just on the side here. I'm writing in my notebook, rig at 9:05. And I'm putting a question mark because I'll conclude that in a few minutes. But I'm going to say, it looks to me, based on the daily chart, and now based on the 120-minute chart, that as a risk to reward, it's unfortunately a big percentage, because at 9:05 you have to actually put a stop in below yesterday's low, which is at 868. To me, a 40 cent stop, 5% stop on a stock like this, I'd prefer not to do it. So I'm going to make the suggestion. If you're willing to hold off until 2:15 or somewhere after 2 o'clock and see how the oils are acting, that's fine. I think that is this a refiner? I think it's a refiner. Remember, they were deeply involved with the Louisiana, the whole oil spill. So now what we've got is the chance that this particular low could give you a very nice percentage gain. 4% risk, but there's a chance that you could get about 90 cents. Yeah, you could get about a 12% gain if everything works out. So, Judy, I'm putting that aside. I want to do the next one, which is WFT. WFT is Weatherford. Oh, I haven't looked at that for a long time. That's a little bit better chart because it's already making higher lows and higher highs. So I'm putting Weatherford in at $5.64. WTF at 503 right now. And then the OIH. So the OIH, the reason why I wanted to take a moment for this is because in the work that I'm doing and the work I did over the last couple of days, I'm starting to see signs that are going to involve the dollar and gold and commodities, etc. And if ever there was an inflection point moment, this just might be it. Now, OIH, yesterday I didn't like it because it was coming down. Today it spiked up. This reversal with a stochastic at 8.66, this is the Market Vectors Oil Service ETF, is actually showing some signs here that the base that's been forming is going to be very important. Why? Because the low that was made on the week of the 20th of May at 26.24, that gets taken out. You've got an arch formation that says be careful because the MACD will have room to go down and stochastic at 18%. There's room once again to go down to the single digits. But this is the opportunity, both in the weekly and the monthly, to see a bounce that can last 2 to 3 weeks. So I'm putting that in here as with the OIH. So now that's it. Now the next question was, and I do want to deal with these because, so the wave count in the OIH, good question, is OIH is peak D in the monthly, peak B in the daily, and I haven't quite done the notation. There was a failure pattern at a G/C. Let's call it a G because that's what it was. This is one of those cases where you just have to wait and let the wave count take care of itself, and it did. It was a rogue wave, spiked to the upside, and now it's given it almost all of it back, but not everything, and it's taken time rather than price. So here the OIH is saying, it's real simple. It's a 26.97, a close, not just a pullback, but a close for 2 days below 26.31 over the next week would be very negative. But if, for whatever reason, this afternoon, there's a pop from 26.98 to the 27.30s, that'll be really nice action. Keeping that in mind. What other questions? I think they were all dealing with this. Okay, now let's go to crude oil, because in a sense, you've got to be looking at the two together, but there are moments, just like in other sectors, you can get a core doing something and then the peripherals are doing something else. Look at the crude oil. Crude oil is held a little bit better. And the weekly chart, let me move this away. The weekly chart still says the downside is not done. And all I can say is that I'll give you numbers. Crude oil is at $45.19, up $1.40, $1.14. If crude oil goes above $46.30 in the next 2 days, that's going to be very positive because it suggests that the dollar is going to weaken and that crude oil will rally a little bit sharper. It should also say that gold could move higher. I'm trying to put them all together now, even though there are periods where I say, don't worry, the gold, crude oil is in its own world, even though it's in a trading band. I think that there's a tremendous supply issue and the upside's limited, the downside's not. But right now, gold is stuck in this range. The dollar just made that leg D. Oh, wow. We've got really important parameters to watch on what's said this afternoon. So one other HOD. So the crude oil, Eiffel Tower pattern. No, wait. Eiffel Tower pattern, crude oil. Let me just go back again. Yeah, this is not really. That was an Eiffel Tower right there, but now you've had that right arm extension in the weekly. No, this is now just making an inverted V with another little inverted V, and it becomes much more serious, and it has the characteristic of that Eiffel Tower if 40.53 is taken out. It's going to take a lot to take that out in a short period of time. However, I'll be back, and we'll go into the VIX index. We'll talk
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi everyone, we're back. Dow's up 56, S&P up 7.5. Just a kind of a wait and see attitude. Let's go to Brent in Martinez, California. Brent, how are you?
Doing well, Basil. How are you? I haven't talked with you for a while.
Yes, I'm doing fine. And you are looking at, I was just talking about the sector, and you've come up
Yes,
with,
you were.
yeah.
You were talking about RID, which I actually bought yesterday at 880,
Oh,
and
very nice.
I have a stop. My stop's at 850. I'm willing to take. I bought 1,000 shares. I'm willing to take a hit of, $300 if it happens to go that way. And
Well,
then,
that's good. I tell you why that's good, because the risk to reward, this is the first time that I can say, based on the technicals, that there is a possibility that the risk to reward is here on a more sustained level if certain things happen. So you're looking at Noble, which is at $5.38, up 26 cents. Have you already taken a position?
I did. I bought that this morning at 520.
Okay, so you're up 19 cents. That's very good. So that what we're looking at, folks, this is going to be very important. You see, a 27-cent move on a stock that's trading at 5.39 is up 5.27%. So, and that's from yesterday's close. So the risk to reward works both ways, because if it suddenly drops, say 38 cents back under $5, you're looking at a pretty big percentage. But at this particular point, the way to do this is through a measured move in your portfolio. In other words, this is not one, well, maybe some people do, but this is not one where you put your entire portfolio into it and say, I'm buying X number of thousands of shares, and because it's going to $7.53 based on my technical analysis. Because I can assure you that Noble hasn't heard you. It's on its own track. It'll do what it has to do, not what you wanted to do. So this is very nice, because yesterday was today's confirmation about yesterday's buy, and we don't know what will happen by 4 o'clock today, but so far you've got at least the comfort of knowing that you entered correctly, almost at the low of the day, and within that context, you're up a little bit, and it's giving you a bit of a mental cushion, not a physical cushion, because you've got your stop lower down. This is what I'm looking at. As I was even in the break, I was looking at certain aspects of in this particular sector. It could be very sudden. In fact, it could even be one of those whippy sessions where at the end of the day, you actually have been whipped because something like a Noble's NE trading at 540 now, somebody's listening to your conversation, suddenly drops and it goes down to $5.10. And then by tomorrow this time, it's at $5.93, because that's in this whippy action. If the technicals are starting to improve, which they are in all the stocks we've discussed so far in the daily, in some of them a little bit in the weekly chart, because if you look at the MACD, the price is way below where it was when Nobles was trading in February. The stochastic, let me just make sure that I'm right. Yeah, the price was way up at $6.66 as the low. The MACD was much lower. Now the price is way down in the $5 low fives, and this MACD is much improved. And the histogram, those little vertical bars have been improving, saying that the distance between these two moving averages is contracting, and that's usually a good sign. And the MACD is higher than it was just recently, so the price has come down and the stochastics moved higher. I like your position. I'm going to make, I've discussed this before. We've said that to make it a long term, you really need the weekly to improve and to hold above the 9-period moving average. And not once has it done that. So you've got real nice trades, but they turned out to be shorter term trades rather than intermediate term buy and hold. This is the first time that there is the possibility that if there is a rally between this afternoon, today's Wednesday, and Tuesday afternoon, and that the price of Noble NE is trading anywhere close to $6, that's the first time that the 9-period moving average is going to become an attractor that has the potential to become a base for a very long time. Why? Because the MACD is flattened out in the weekly chart. The histogram is improved. The stochastic has rallied. And I believe that if it had to do that, you'd finally get a little V-shaped pattern in the on-balance volume. And that'll be a big help. So all I can say is great entry. My thinking is that if it survives today and tomorrow without cracking, say, 520, 515 support, but in fact closes either here or a little bit higher, I think you've got yourself a little bit more than a trade, and that's really important because, Brent, when you enter these things, you do it beautifully, but you don't always know how long it's going to last.
That's right, Basil. Yeah.
So your intention is that you want to be buying it at the low. So some people that say, I just want the middle part. I'm prepared to give up the low. I'm prepared to give up the high. I want the big chunk in the middle. But you know what? If you can buy the lows or the highs exactly right, it gives you a way big comfort factor because you can have a trading position without even worrying about your core. And that would be very nice if both in Noble and in Rig, you've got yourself something that you bought almost at the lows. And now, although it's not spectacular to the upside, for you it's a beautiful percentage gain because every week it's starting to move a little bit higher. That's really what you want to see. In fact, I'd even prefer that to having a big spike over the next 2 days and then fading. I would much rather just like a stair-step move. Every level goes up, and then it takes a little while to form the base. Then it goes to a higher high, little while. That'll be a very subtle, quiet, stealth rally in this sector. There is the possibility that could happen.
Yeah, I think you're right, Basil. That's what I, would like to see. I'll be patient with it, and I just tried to wait until I saw an opportunity to take a position, and we'll see how it all works out. But at this point, to me, the risk reward was I felt in my favor, and we'll see what happens with it.
So your plan has worked thus far. And all I can say is it was great timing. You're really good at the timing. Let the stock now say, Brent, you were just perfect. You did it right, and we're going to help you along the way.
Yeah. All right, Basil. If you get a chance, not with me on the phone, but there's two others that I didn't buy that, again, we're kind of near bottoms in different areas, but they look interesting.
Or just give me the names. I'll try to look at them later.
Sure. Fossil, F-O-S-L, and then Gilead, G-I-L-D. So those are just ones you might want to take a look at some point. All right.
Okay. All right. Thank you for calling.
Right, take care, Basil. Thank you for your help.
My pleasure. So let's just do this, folks. I want you to, in case I run out of time, I don't want to rush everything. We've got plenty of time. I just want to go through what I'm looking at, why I'm looking at it, and I'll give you the reasoning. One of the reasons why I was satisfied, I wasn't happy, but I was satisfied that we got out of our 3 times long, the short position of the Dow for a small gain, is that I didn't want to be at the mercy of a very volatile instrument when the Fed news can propagate what's going on. In other words, we've already had a pretty decent rally, a couple of days of trying to rally, you're not always holding it, but another day with a rally. And if someone's there saying, hey, things are looking great, what happens if we close at the high and then gap up again tomorrow? You're stuck if you're in the wrong position. You can always get into that position again. So I'll talk about that. I'll talk about planning what we're going to do here. I'll be right back straight after these important messages. Dow's now up 49, S&P's up 6. Basil Chapman, Target Efficient.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, so let me go through this very thoroughly. Here what we've got. The SCO, which I typed in recently, that when the SCO was at 96.30s at 11 a.m., and I forgot to put the date. Must have been, I don't know when it was. Oh, well, whatever it was. I typed in, looks like the 101.50s at the 200 EMA is strong resistance, which it became right there, over, and it breaks upwards in leg C. So it did go, that's the 200 period moving average. It did go to peak C, because today's lower. Oh, it must have been yesterday. Is that right? And I put in, support is at 92.70s. We're at 93.22 right now. We went to the low of 92. Is this where you want to be buying the twice? I think it's the 2 times pro shares, ultra short Bloomberg crude oil. I'm going to suggest, certainly not right now. You do have to wait for, and there's the inverse, there's crude oil itself. I think, oh, wait a minute, SCO is the pro shares ultra short. Yep. And here is crude oil. So that's the chart pattern. The upside down pattern is right here. There it is. I'm going to suggest that based on what we've just discussed in the oil service industry, there's a little bit of a difference. The one can move a little bit separately to the other. So let's just look at let's look at this, and I'm going to just pop the USO right now. Yeah, it's the same thing. Would I be buying USO? Would I be shorting the USO? To tell you the truth, when you're right in the middle of a trend, this is a downtrend, I do have to wait for the upside to be pierced. I have to say, you know what, for the USO, until you can close above, it's at 1031, until it can close above 1065, it's just stuck in a range. I'm just gonna say, you know, I have to laugh. There's been so much confusion. And for my subscribers, we've tried our very best. We've got some shorts, we've got some longs, and some nibbles here, just small positions as well. But at the same time, the sell signals from August the 15th is still being in place, the sell mode and the short position. And here we are jumping around, and it's been a month. We aren't all that far down, and yet you've still got an active short position with the sell mode. But I'm going to make it real clear. start trading in the 18,300s, and I have to say, you know what? We could start to move towards the highs again. I'm going to have to rethink that position. And if you close below 18,050, definitely 18,000, there's that level of 17,990s, which has been hit so many times. Go below that, and the weekly charts are going to be very poor. As it is, they're very poor. So it's just a matter of whether this bounces or not. So I'm just going to hold off, and I'm going to say I can't give you. This was the area that I said, let's look at the SCO again. But it looks to me like it wants to go down a little further, which suggests that crude oil can bounce a little bit further. So a lot's going to happen. Let me give parameters, and let me also just say XAL was a question. And I may as well do that because I'm talking about in the energy area. So XAL is the ARCA airline index. It made a peak E-top in the daily. It's just, it can't get through this resistance. When it does get through this resistance right here, and it goes above, it's at 88.47, up 11 cents. But if it can get above 94, that's the XAL. That's going to be really important. But to have an impact, the monthly needs to be nicely above 94, and then you've broken a downtrend line. So that's why I'm saying this is very important, because I don't believe that the Fed changes a trend, but they can exacerbate it. In other words, we're at a swing point right now, in the sense that it just takes 200 points down in the Dow to really say the weekly charts are now very poor, that we're going lower. We got a sell mode now in the weekly chart, and just says 200 points up. It says, no, we're just going to chop around a little bit longer, maybe because of the election. So you don't want to step in front of the train. When we get a directional confirmation of another move either to the upside or down, I think we can follow that. So let me go through this now. So that's the XAL. If the XAL, let me look at the IYT. I think Federal Express came out with earnings. IYT is the transportation index. It's trying to have a bounce. It's trying to get above that downtrend line. It too is a downtrend line. It's been struggling with it. So let's look at FDX, which was up 4 or something like that. Oh, now it's up 10 at 172.89. This is broken out, and it makes the monthly very positive. Oh, my goodness. And this is now leg, I have to call this new leg C. That's a big plus in the transportation. What's the other one that goes with the UPS? UPS is trading at 109.29. It had a spike to the 109.89 area. Here's the trend line. You see, that's what I was saying before, that within a sector you can get so many diversionary aspects to it. Look, there's that resistance. Bam, it hits it and pulls back. So that's the same thing in the the weekly chart. And it has gone, technically it has gone to a down arrow. Oh, this is just so interesting. Yeah, look, there it is. So UPS has a different chart pattern now to Federal Express, because it needs to take out 111.83 to start like C up in the monthly, and then all of a sudden you've got 114.40, which was the all-time high, beckoning. So talk about a mixed market. So I have to tell you that the IYT is acting okay. Now, Federal Express must have said the outlook is good, and of course they got all those Amazon things. Let's look at Amazon. I see a direct connection between this phase coming up and the Christmas season, holiday season. Amazon's holding okay. It's made a G. If it makes a new high, it's going to be very confusing. 790.79. I had a laugh at the when I'm looking at these different charts. For instance, I still call it Google, not Alphabet, so GOOG. It's made a top. It hasn't broken it yet. If I look at Amazon, it's the same thing. Look at Facebook. Facebook, same thing, made its peak just recently, and now it's stuck. It just hasn't gone further. Netflix, NFLX. Whoa, look at Netflix. See, I must tell you that NQ, this is going to be so interesting. That's why I wanted this time, if you didn't mind, that we're not taking calls right this moment, because the NQ it hasn't broken out. So this could be an isolated move to the upside. We'll see. We'll know by 4 o'clock today. Here's my numbers. The VIX index. Trading right now, VIX.X. Don't put in that. Put in a VIX.X and a dollar sign. There it is. Trading at $15. I've made it real clear. That was a peak D top in the daily chart. The weekly chart is just one of those crazy pullbacks that happens because it can't hold higher prices for too long. So on Friday, if the let's go today, one at a time. If this afternoon the VIX index is trading above 15.80, somewhere in the 1580 to 1560 level, and the Dow's just got the spectacular 180-point move, and the S&P is up 16 to 20 points, that's just saying, at least for now, we're going to be moving higher. All right, even if it's just a short-term rally into next week before the market really decides what it wants to do, that's the way it is. On the downside, the VIX index, if there's a close, if the VIX index is below 1450 and the Dow is up 180, S&P up 18 or so, that's going to be very positive. If in fact the S&P jumps and it goes over 16 and the Dow gives back all the gains and is trading down 60 or 100 points at 4 o'clock, then we are continuing the down mode in the weekly chart. That's the way I'm going to be looking at it. I'll be back straight after this. Dow's up 151. Basil.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Don't forget, folks, programming all the way through. And I will be giving an update to my subscribers between 2:15 and 2:30. I'm not sure we'll do anything, but there are a couple of things that I would like to just mention in passing as we go through. There might be positions. We'll see. So I had a question about Nugget. Direction Daily. This is gold. This is really tough for me. So wait, Nugget is the positive side, right? Let me just double check. Yep. So, okay. So this is so difficult. Here you are within 2 hours, just 2 hours of a pretty big announcement, which could have gold soaring to the upside or just meandering or maybe even pulling back. So I don't really want to give you anything on this because it's so dumb. I mean, I'd say, yeah, Nugget looks great right now coming off the bottom. If it goes at 20.18, if it goes to 21.54, fabulous action. But whoops, wait a minute, if it goes down to 18, not so good. I just can't do that with this news coming out. If there was no news, I'd say, you know what, you've got a little bounce here, and it really could go to 20.15 from the 2018 level. And if it can do that, that's very positive. My target would be one step at a time, the high of the 9th, which was 22.05. But believe me, if it gives back the gap and it goes into the doji candle body of yesterday at 18.42, it's a problem. I mean, that's the way I would do it. I'm sorry. I'd be remiss in saying to you, it's just a pure guess because I don't know what's going to happen at 2 o'clock. So I'm just going to say sorry. I'm not much help there. But now, so Sarah wants to know about Wells Fargo, WFC, I believe, WFC, yes. So let's just do this quickly because this is going to be important. Wells Fargo made a peak D top right there, DOE right there on the 1st of September, plummets from the 51 area down to the 45s. Now it's at 45.74. This is going to be partly a clue. So I don't like WFC, but if you want to look at now I have to go back to the BKX, and I haven't done that notation for ages. All right, BKX, which is in A, B, C, D, E. It's made a peak F top, I believe, back on the 1st of September. If the BKX, the bank index, trading at 71.30, is able to climb this afternoon into the 72s, I would say it's a really good response for the banks. But if it fails and it's from 71.30, it goes down below 61. That's saying, uh-oh, just be real careful. And KRE, of course, I've done the notation on KRE. KRE made a peak G-top. It's the same thing, 42.05. If it can rally over 35 cents by this afternoon, 4 o'clock, I think this will be the theme. You can start jumping back into the banks with select banks. That's it. These are the regionals. But if there's a pullback below 41.60, watch out. So we've got like a minute to go. This is what I'm going to do. I want to run these just as I'm looking at it. I'm looking at the IBB. Has it completed its move? Remember yesterday we had a call and we were looking at the IBB. And I said, we're so close. I'm not sure if you actually want to start a position, but I would not use the 3 times LABB right now. I'd use just the 2 times BIS. Because it's so close to breaking out. But if it fails there, that's a triple top. And the pattern of the Chapman wave reverse ladle and cup pattern says that pattern often fails. It tries to retest and then it fails. So that's what I'm thinking here. But it's down 3, the IBB. If you want to look at something else that's very important, I'm going to just go back to the TLT. So the TLT is at 134.54. A break below 132.81, the 200 period exponential moving average, it's below the 9. The 200 period moving average of 132.81, that's going to say yields are going high. Oh, I never had a chance to do this. Here's the chart. We've had leg B up in the weekly, leg C in the 10-year. That's the 30-year. This is the 10-year yield, and this is the 5-year yield. So, it's already made a C in the 5-year. So this is going to be very important because at 17.01 in the 10-year, a spike into the 18s is going to say, hey, what the reason why look at this. There's the Philadelphia housing sector. Look, it's pulling back from the D. Very important day coming up. I'll be updating my subscribers at 2:15 to 2:30, and tomorrow we might be heading into a completely different trend. We'll see. Stay tuned. Great shows coming up. I'll be back tomorrow. Have a great day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.